Welcome into another edition of Market Takes. I know you could have been anywhere in the world, but you're here with me. I appreciate that. I am Dion Rabouin, reporter at the Wall Street Journal. This is Market Takes. We are doing a look ahead. We're going to talk through, there's a lot going on in the economy, but there are three big things that you need to be watching out for this week. We are going to go through, break down all of them, what they are, why they matter, and what you should be looking out for this week. The first is the state of housing. We have four big reports out this week. I'm going to explain what they are and why each of them matters. Next, we have earnings. Of course, last week, we got earnings season kicked off. You heard from the big banks, but this week is going to be an even more important week of earnings for the banking sector and for the economy. I'm going to tell you why that is and what to look out for. Third, there's been a lot of talk about the weakening U.S. dollar, a lot of worries about the dollar's global prospects and things like that. We are going to talk about the state of the dollar and a report that comes out this week that could tell us a little bit more, give some context on the state of the dollar. So we're going to talk about all of that right now. So let's get into it. Let's start talking about housing and why things are getting better in the housing sector and why maybe that's not such a good thing. So first chart I want to put up here on your screen is the NAHB Housing Market Index. Now, we actually just got the latest update for that report out right now at the start of Market Takes, and that report came in higher than last month. Now, you see there on your screen the last 4 months, you see the report just going up, higher. Well, it went even higher April this month. The last month you see there is 44 for March. In April, it went up to 45. So that index just showing the overall pace of price increases, of confidence, of consumers, of builders, and things like that. And that has been picking up. Now, you normally think, okay, that's a good thing. The economy is growing, but that might not be such a good thing because we're seeing all of the housing market indicators move in exactly this same direction. So that chart there illustrating overall home builder confidence and the pace of increases in prices, we are seeing that exact same kind of trend where things have been moving lower. The Fed raised interest rates. They're trying to slow down the economy. They want consumers to reconsider their purchasing decisions, not take on more credit, and that's what they want. They want to see things come down and get lower and get worse, and so there's less confidence, less borrowing, less spending. But that's not what we've seen the past 3 months, going all the way back, and now past 4 or 5 months, all the way through December of last year. We have seen a pickup and an increase, and that continued in April. Now, we're also seeing that in housing starts. We get the latest housing starts data on Tuesday. That last month accelerated 9.8%, almost 10% month over month. That was the fastest pace since September. Home construction had been trending lower, and those housing starts number tells us about what builders are doing. They're actually starting housing projects. That picked up in a big way, almost 10% last month. We will see if that continues tomorrow. A big piece of that was multifamily, which we know is people putting money investing in units for renting out rather than for living. We also get the MBA's weekly mortgage application survey. Last week, the 30-year fixed rate fell to 6.3%, the lowest level in 2 months, and we saw applications for mortgages increased by 8%. Mike Fratantoni, he is the SVP and the chief economist, or the SVP, senior vice president at the Mortgage Bankers Association and their chief economist. He said that prospective home buyers this year have been quite sensitive to any drop in mortgage rates. Mortgage rates dropping to 6.3%. Now that's a little lower, but remember a year or two ago, you saw mortgage rates down about that 3 handle, maybe getting up to the 4 handle. Now mortgage rates still high, still at 6.3%, but you're seeing housing starts pick up. You're seeing mortgage applications pick up. And everything the Fed is doing to try to slow the economy is kind of being undone slowly but surely. Remember, mortgages, mortgage rates, housing, all those things were the first thing to slow down when the Fed first started raising interest rates. Now they're starting to pick back up as the Fed is expected to slow down its interest rate hiking cycle. The markets are showing one more expected increase in May next month and then cuts starting in July. Well, consumers are responding, taking on more mortgages, more debts, and we're seeing housing starts pick back up. We've seen the housing market index pick back up. We also will get the existing home sales report out on Thursday. Last month, we saw existing home sales rise by almost 15%. We are going to be right here Thursday breaking down the existing home sales report, telling you why that happens. That could be a big market mover because existing homes are most of the economy or most of the market when it comes to mortgages. So be with us right here on Market Takes Thursday at noon. We'll break all that down. Now, let's talk about earnings really quickly. Last week, we had bank earnings for the big banks, JP Morgan, Citigroup, Wells Fargo, all big booming blowout earnings. JP Morgan said profit was up 52% in the first quarter, $38.3 billion in revenue. Wells Fargo, $5 billion. Citigroup, $4.6 billion. PNC Bank, another big one, $1.7 billion. These are huge, big booming numbers. JP Morgan shares actually rose 7.5%. That was the number one stock in the S&P 500 on Friday. And then you had Citigroup up 5%, 4.8%, the second biggest increase in the overall S&P 500. But let's throw something up here on your screen. I want to put that number or those numbers in context so you can see just how much folks in the investing community are really responding to that. That huge drop happened after SVB, and you see that there at the edge of your screen. That's the Friday response. So investors, okay, well, banks are doing a little bit better. And remember, this index you're seeing is mostly the big banks. It's mostly Citigroup. It's mostly JP Morgan, Bank of America. Even those big blowout earnings weren't enough to really get investors excited about the banks, and you see a little pickup, but not that much. So that just illustrates that investors are not sold that banks are back. There's still a lot of worry about the banking sector, and we will find out this week. We get reports from Ally, Fifth Third, M&T Bank, Western Alliance, Zion, KeyBank, some of these regional banks that are the ones most in trouble. We saw JP Morgan CFO Jeremy Barnum said there's about $50 billion of deposit inflows in the first quarter. That's largely coming from those regional banks. We are going to find out how those regional banks did this week and expect the numbers to not be so great, and that could cause another sell-off in the market. Look out for that. We also get earnings from Johnson & Johnson, Netflix, Tesla, United Airlines, and a big one I think is going to be Schwab. Those earnings are going to be key. Watch out for that. Last thing we want to talk about here on Market Takes is the weak dollar. There's been all kinds of talk about this. Folks have been worried. News headlines popping up here and there. Also, you've seen Secretary of the Treasury Janet Yellen gave an interview where she was asked directly about the state of the dollar. So want to throw something on your screen here really quickly to just show you the movement overall. You see there, the dollar is clearly down this year, but that movement has been up and down, and you see at the edge of your screen there on the right, picking back up. Investors are very strongly positioned right now, speculative investors, for a big pickup and an increase in the dollar this year. They're positioned net long on the dollar against just about every other major currency out there. So that chart illustrating the overall positioning right now that we've seen the dollar decline a little bit. It's weaker, but historically not that big a move. I want to read you a real quick quote from Secretary Yellen. She said, quote, "There is a risk when we use financial sanctions that are linked to the role of the dollar that over time it could undermine the hegemony of the dollar. What that means is the value of the dollar, the ability and the omnipresence of the dollar in global financial systems. There's a risk there. We've seen talk from China, from Russia. There's been a long-term push against the dollar because they don't want the United States to be able to sanction them to cause economic pain. If they don't use the dollar, well, the U.S. can't cut them out of the banking system, et cetera, et cetera." But as you saw from that chart, the dollar has declined in value a little bit, but investors not buying that story, thinking, okay, the dollar's power and strength is going to come back, and that over the course of time, over the course even of this year, we will be back. We are at historically strong levels for the dollar, and folks are thinking, okay, that dollar strength is going to come back because maybe interest rates are picking up. This really is a story more about the Federal Reserve and central banks and the expectation for the European Central Bank to raise rates more than the Fed. This isn't about people not using the dollar or the dollar going away. Just wanted to make that clear. And this week we will hear from the Fed. The Fed's beige book is out on Wednesday. That's going to tell us how the Fed is seeing the overall economy. They talk to a lot of businesses and they say, hey, what's going on in your district, in your area? We will get that report on Wednesday. Listen, that's going to do it for us here on Market Takes. Like I said, I know you could have been anywhere in the world, but you were here with me and I appreciate that. Thursday, we'll be breaking down the existing home sales report at noon. Be here or be that's a square, don't do it. Listen, that's going to do it from Market Takes. I'm Dion Rabouin, reporter at the Wall Street Journal. We will see you next time.